Welcome to this installment of Clarifying Tax Situations with attorney and CPA David W. Crossing.
Can a tax preparer have potential criminal liability where they counsel a client not to report their cryptocurrency? I actually got a phone call the other day from a potential client that told me the reason he hadn't filed returns reporting cryptocurrency in prior years is that his tax advisor had no idea how to report it. So they said, just ignore it. When you ultimately go to sell the stuff, we'll recognize gains at that time. I can't tell you how horrible that advice is. And matter of fact, reliance on a professional is grounds for penalty abatement. But imagine how this plays out. You put down as grounds for penalty abatement that your tax advisor told you not to report a taxable transaction. The government decides we're angry at that advisor for doing that and confronts them on it. The advisor lies through their teeth and says, no, he never told me about the cryptocurrency transactions. And now, instead of you getting abatement of penalties, you could face criminal prosecution because that would be a badge of fraud against you. Again, you have a conflict of interest with your preparer in this situation. So what type of liabilities do preparers have? Well, anytime a preparer advises a client to break the law on purpose, especially where that reduces the tax liability, they can be held liable for aiding and abetting the income tax evasion of another. They could be held liable for making a false statement on a return and a host of other criminal penalties.